This is the exact strategy that I have used to get 5 payouts from Topstep in just this 1 month. And the crazy thing, it's not because, I'm trading with massive size or, catching some once a month crazy move. It's because I've shifted the way that I trade and look at liquidity. So most traders wait for liquidity to be grabbed and then they try and take the trade. They think, okay, price just ran these highs, now let me try and go the other way. But that's not what I do. And it's not what I want you guys to. I want to help reframe the way you guys think and use about how you actually trade liquidity the right way. So instead of liquidity sweeps, I trade into them. Because if I can get good identifying the levels that the market clearly wants to tap into, then that becomes my trade. And when price gets there, that's where I'm taking my profit, not being scrambled trying to trade out of that. That's my exit. So let me show you guys why you've probably been trading liquidity completely wrong and how this shift has allowed me to pull consistent payouts month after month using funded capital. Let's get into it. So let's just briefly talk to you guys about how most people trade liquidity. They see some, equal highs or equal lows and start thinking to themselves, that's where price is going to reverse from. So they sit there, they wait and they wait. Then finally, price does sweep that level and they jump in. And the logic is, okay, smart money just grabbed the liquidity. Now it's time to go in the other direction. But here's the issue. Most liquidity sweeps don't mean instant reversals. Sometimes them highs or lows can get grabbed and price can just keep running even more, a couple of 100, 200 plus ticks more. Or worse, price taps that level, hesitates, gives a fake out and then reverses. And the result? Traders either miss the move entirely, get caught in the chop, or enter in too early with literally zero structure. And this is what we like to call the liquidity graveyard. It's where good ideas die if you don't know how to read the actual context. And here's the shift that I want you guys to make. Instead of asking, what will price do after the liquidity has been taken? Start asking, how do I trade into them liquidity levels? And let me say that again, guys. I've traded a lot of liquidity concepts throughout the years, and this is what has been working the absolute best for me. I'm not waiting for the sweep, I'm aiming for it. And I treat liquidity levels as sort of magnets, as opposed to people who look at them from the perspective of traps and then get caught trying to trade out of them. And they can't differentiate what's a liquidity grab and what's a break and retest. Look at them from the perspective of magnets. And if I can identify where the market wants to go, where the orders are sitting, then that becomes my trade idea and that becomes my exit. So whilst others are sitting back, waiting for confirmation, talking themselves out of the trade, I'm already in the trade and riding the move into the level that everyone else is watching. And this is what I mean when I say, I don't need a reaction, I need a conviction. So how does this look in real life practice? I'm going to show you guys some live examples on the charts as well. So here's the structure that I like to follow. So start with the higher time frames, either the 4-hour or the daily. I want to understand, am I bullish or am I bearish on this day? And can I see very clear liquidity levels, such as daily lows and daily highs in this example? Coming into charts today, daily highs and daily lows, very, very nice liquidity levels. And then number 2 is marking the magnet. So if I'm looking for longs, previous daily highs on a daily time frame is going to be my magnet level. Then once I've been able to understand that I'll start now dropping down to the lower time frame and identifying my levels a lot more. So this was the play from Friday where we came down and we liquidated these lows, and then we had amazing breakout buys from that point where back up into previous daily highs. Very, very simple. And my 30-minute entry may be as simple as a fake out, a morning star, an evening star if I'm looking for sells. Super, super simple. But I'm not on the lower time frame trying to figure out my direction. I've done my direction and my bias based on the higher time frame. Now the lower time frame is refining these levels a little bit more and looking for very simple reversal and breakout patterns. And then number 4 is all about entering with purpose. I'm entering because I have conviction that price is going to grab this liquidity level, and that is the trade. And when price hits that level, guess what? That's my profit taking area. That's my exit of the trade. So let me show you guys a real example of a trade that we took live on YouTube for absolutely free. So as you guys can see right here is we've been calling these very, very nice liquidity levels here also sitting around the very nice psychological level of 32.50. You guys can see you have this very, very nice double top. Lots of people trying to short here, stop sitting just above, and our liquidity levels were also here and this very nice double top all the way back up here. So in terms of keeping it clean, let's just keep on the highest point, and that's going to be our main target. Now, very, very simple, guys. We also want to see a downside level that has been grabbed. And sometimes, you know, when price is trading around here, I can actually short down into that level before then when price does get down here, bam, that's where I'm starting to look for longs. Now, as we start breaking back to the upside, that's the markets confirming there's the volume, there's the direction, and now the markets are moving in anticipation of what I've analyzed. So the markets show me, cool, we're closing bullish, fantastic. That's my confirmation. This is time for me to go long. And where am I trading into? I'm trading into this very nice liquidity level. Now, I didn't hold this up for a total of 350 ticks. However, this was a beautiful example of how liquidity gets hit. And rather than me trying to wait for price to get up into here and trying to go short, there's nothing to say that when you grab these highs, you don't grab them and continue pushing higher like this example. So rather than most people who trade liquidity are trying to get short up here, that's my exit. I'm exiting at these liquidity levels because I've got good at identifying where price needs to go. And if you've been trading liquidity for a while and you've been able to get good at understanding this is a high probability level that price needs to grab before doing something else, amazing. Rather than waiting for these highs to get grabbed, you know, trying to go short and getting stopped out, or just missing out on a very clear opportunity, expose yourself to the fact that anything can happen. And the way you do that is by buying or selling into these levels as long as the range is worth it. Super, super simple. Most people get stuck trying to understand what's a break and retest and what's a liquidity grab. Don't worry about that. What you want to worry about is being able to identify these levels and trading into them. And why this works so well, guys, is because the markets aren't random. It's engineered to fill orders. And liquidity gets targeted not just because it's some sort of magical level, but because that's where the volume is. And the big players can't just, you know, enter the markets completely randomly. They need those liquidity zones to be able to execute their trades. So if you can identify where price is being drawn to, and then finally you can build a structured trade into that area, and your edge is miles ahead of those who are waiting for price to get swept and then praying that it's some sort of reversal. You're thinking like a sniper, not a chaser. But of course, this isn't without risk. So here's what you guys also want to avoid. Don't just guess where liquidity is. It needs to be clean and obvious. Don't force trades in messy structure. And always make sure your lower time frame has structure and timing, not just, you know, a blind bet in a single direction. And this strategy absolutely works the best when the higher time frame is clear and you're in flow of the markets, not always trying to fight them. So if you've been sitting back, you know, waiting for liquidity to be grabbed, hoping to catch the next big reversal, stop. Start training your eye to understand where the market needs to go and trade into it. And when it gets there, amazing. That's your exit, not your scrambled entry. And this shift for me, and as well as the other guys inside the Traders Club, has absolutely changed everything. It gives me clear entries, cleaner trades, and fantastic exits as well. So if you guys do want more breakdowns like this, or if you want help applying this to your very own strategy, feel free to book a completely free call in with my team below, and the guys will be happy to absolutely help you out. I appreciate you guys for watching. Hit that like button, subscribe if you're actually serious about your trading journey, and I'll catch you guys in the next one. Peace.